Wall Street just sent one of its strongest signals yet that the altcoin market is becoming impossible to ignore. Morgan Stanley has officially launched new exchange-traded products tied to Ethereum and Solana. That means investors can now gain exposure to two of crypto's largest altcoins through traditional brokerage accounts, without purchasing or storing the tokens themselves. And this may be much bigger than another routine fund launch. Morgan Stanley is one of the most recognizable names in global finance. Earlier this year, the company launched its first Bitcoin investment product. By July 16th, that fund had already attracted more than $381 million in assets. Now Morgan Stanley is expanding beyond Bitcoin. Its new Ethereum Trust and Solana Trust are trading on the New York Stock Exchange's ARCA platform. Both products carry an expense ratio of only 0.14%, placing them among the lowest-cost crypto investment products available at launch. They also intend to stake a portion of their Ethereum and Solana holdings to earn network rewards. This matters because traditional investors are no longer being offered exposure to Bitcoin alone. Wall Street is beginning to treat Ethereum and Solana as serious parts of the digital asset market. Ethereum provides the foundation for decentralized finance, stablecoins, and thousands of blockchain applications. Solana offers rapid transactions, low costs, and one of crypto's most active ecosystems for trading, payments, and consumer applications. Morgan Stanley, selecting both assets, suggests institutional demand is spreading further into the altcoin market. It also makes crypto easier to access. Investors who are uncomfortable managing wallets, private keys, or cryptocurrency exchanges can purchase these products through a familiar brokerage account. But there is an important difference. Owning an exchange-traded product is not the same as owning Ethereum or Solana directly. Investors receive shares connected to the value of the underlying assets. They cannot withdraw those shares to a blockchain wallet, use them in decentralized applications, or personally stake the tokens. The funds also introduce management fees, tracking risk, and potential complications connected to staking. Still, their launch could bring more attention and institutional capital into both ecosystems. It could also encourage other major financial firms to expand beyond Bitcoin. The larger message is clear: crypto adoption is no longer limited to Bitcoin. Traditional finance is gradually building products around the broader blockchain economy. For people who prefer owning and managing their cryptocurrency directly, Best Wallet is worth checking out. Best Wallet is a non-custodial multi-chain app that allows users to buy, store, send, and swap assets, including Bitcoin, Ethereum, and Solana, from one interface. Because it is non-custodial, users maintain control over their crypto rather than depending entirely on a centralized platform. Best Wallet also includes an upcoming token section, which makes it easier to discover and participate in selected early-stage crypto projects. One of the most interesting projects currently attracting attention is Bitcoin Hyper. Bitcoin Hyper is developing a Bitcoin Layer 2 network that uses Solana virtual machine technology. The idea is to combine Bitcoin's established capital and security-focused settlement layer with the speed and programmability associated with Solana. Bitcoin Hyper aims to support near-instant, lower-cost Bitcoin transactions, along with staking, decentralized exchanges, and other decentralized applications. That connection is especially relevant now. Morgan Stanley's decision to launch a dedicated Solana product demonstrates that major financial institutions recognize the importance of high-speed blockchain infrastructure. Bitcoin Hyper is attempting to bring similar execution capabilities into the Bitcoin ecosystem. One Hyper token is currently priced at $0.0136839. The next scheduled presale price increase is coming in less than 2 days. Because Bitcoin Hyper remains in its early presale stages, someone can begin with a relatively small speculative position rather than committing a large amount of capital. But early-stage projects also carry much greater risk. A low token price does not guarantee strong returns, and Bitcoin Hyper must still successfully deliver its network, attract developers, and secure meaningful adoption after launch. For investors comfortable with that risk, it may be worth researching before the current pricing stage closes. Links to Best Wallet and Bitcoin Hyper are available in the description. Morgan Stanley has now moved from Bitcoin into Ethereum and Solana. The question is no longer whether Wall Street will expand deeper into crypto. The question is which blockchain ecosystem it EMB.